Avalanche is a metaphor for massive change. So we look for these trends where there's these invisible changes happening underneath the surface. And when they all come together and hit an inflection point, the landscape will change forever. And so we have a mantra that we like to invest pre-avalanche in founders that can see the future that's not yet here, but are reading the invisible trends underneath the surface.
Hey everyone, this is Prashant and I'll be your host for the VC 10X podcast. And today we have Katelyn Donnelly with us. Katelyn is the founder and managing director of Avalanche VC, an early stage venture firm investing early in technology companies that transform how people learn, earn, and own. Previously, she was co founder and director at Delivery Associates, the leading public sector advisory firm implementing technology and large-scale reform worldwide. She served on the board until the company partnered with a private equity firm in November 2022. She has invested in companies, funds, and founders building behind massive trends that are obviously the future. In this episode, we talk about investing in companies that ride avalanches, or massive trends that will change the world forever, how they identify an avalanche before it's happened, what are some upcoming avalanches that they have spotted? How they stand out in early stage investing? How they think about portfolio construction? Katelyn's biggest learning as a VC? And lots more. So without wasting any time, let's dive straight in. Hey Katelyn, so good to have you on the VC 10X podcast. How are you doing?
Great. Thanks for having me.
Yeah, it's a pleasure having you on. To start things off, can we first have your story and why you started Avalanche?
Yeah, well, it's a long story, but I will get to it quickly, which is I started my career at McKinsey and then I worked for Pearson, which is a big education company. And I founded their corporate venturing unit in 2011 and ran that for 5 years and loved the role of being a lead investor. I saw how capital that really was committed and could understand a company could create a self-fulfilling prophecy. But being part of a big corporate wasn't an ideal situation because you're always beholden to the larger interests and you're never going to move the bottom line. And I wanted to get back into VC as an exited founder who'd gone through the full experience. So me and a couple of other ex-McKinsey people had an idea for a company that would do what we were doing at McKinsey, but broader and outside. So I co-founded a company called Delivery Associates that works with governments to drive big reform programs. Grew that over 10 years to 300 people, profitability, and sold to private equity in November 2022. And I started angel investing a couple of years before that sale to start building my track record and get back into the market. And am now a VC full-time with our second fund, which is still kind of a demo fund, but testing our ability to get into pre-seed and early seed deals of companies that are transforming how people learn, earn, and own.
Yeah, absolutely. That's very interesting. And the name is Avalanche Ventures, I guess. So what's the thinking behind the name here?
So the thinking originally comes from a paper I co-wrote, published in 2013, called An Avalanche is Coming: Higher Education and the Revolution Ahead. And avalanche is a metaphor for massive change. So we look for these trends where there's these invisible changes happening underneath the surface. And when they all come together and hit an inflection point, the landscape will change forever. And so we have a mantra that we like to invest pre-avalanche in founders that can see the future that's not yet here, but are reading the invisible trends underneath the surface. And so we've identified some of these avalanches
Yeah.
that are very clear from the data. And it's not always clear how it's going to play out or who's going to be a winner, but that's where we begin to work with founders and assess the market and take our bets.
Absolutely. That's a very interesting model to invest. So let's talk about some of these examples of this to get a better sense of this, because I think when the avalanches happen, everyone knows it, right? The
Right.
market knows it, everyone knows it, but detecting it before it is about to happen, that I think is a difficult job to do. So how are you going about doing that part?
Well, there's some massive trends that you just know are going to happen, but people sometimes don't think long term, like through the long term consequences, because they're so focused on today. But for example, like three of the big mega trends are obviously the inflection point that we're at with software eating the world. With AI, it's just eating the world faster. And then the demographic trends of fertility rates declining and lifespans increasing, which put the onus on lifelong learning and the productivity of every young person. So it's now much more important ever before that we get young people over the education learning curve to be productive members of society, and that they learn to continue learning through their entire lifespan, because it's not good enough to be able to amortize a college degree over a 30-year career and then retire. Like, you're going to have to be continuously adding value to society and on ramping and off ramping.
Absolutely, totally agree. So, can we call AI an avalanche that's happening right now, or do you think it's still pre-avalanche?
I think
Yeah.
AI is like a macro avalanche trend. What
Mm-hmm.
we focus on are these sort of like micro avalanches. So where AI might play a role, for example, would be one of our investment verticals is efficacious edutainment. So the idea that gaming plus pedagogy plus technology plus system change of education systems can all be combined into producing higher learning outcomes at scale. And a technology like AI brings down the cost of producing high quality content and personalizing content for students, assessing them quickly. Like, you can know pretty quickly, like within 7 questions, maybe like 2 minutes, often, like someone's English language abilities or math skill levels, where previously people would have to sit down, take a standardized test, wait 2 months, get the results back. Like, that very quickly now. And AI is one of those technologies that enables that huge change.
Absolutely, totally agree. I think tech is going to be one industry that's going to be changed forever with AI coming into the picture, and I think that can be one thing that people can watch out for. And
Yeah.
uh, talking about these avalanches, right? So one thing is identifying these trends early. That okay, these are the trends, or maybe these are the sectors that we should be looking at. These are the companies we should be backing. And the other important aspect of this is the people who are actually equipped to take the advantage of these avalanches, right? So how do you find these people, the founders?
Yeah. Well, it's a lifelong full court press. And part of it is there's an inbound element to it. So by like creating a profile, being out there, recording this podcast, I hope to show myself as a partner that high quality founders that really have vision would want to partner with, because they see that we see the world in a similar place, and that I've had the experience of building a company and then exiting it to private equity that they could learn from, and I'd be able to help tip the scales in their favor in terms of the success for their company. And then of course there's outbound of just putting out like looking on Twitter, LinkedIn, like asking my networks, like, who do you know that's building something interesting? Like, who are your like smart friends who've been thinking about a sector for a long time? Like, send them my way. I'd love to meet them and have a conversation. And then we have a network of network partners and venture partners who are also actively like looking for deals for us. And if they bring one that we do, we offer a carry share program so that they can, get upside in the fund.
Yeah, absolutely. That's great. And talking about avalanches, right? I'm not sure if you're going to open your cards for us here, but what are the current trends that you're excited about that can be like future avalanches that we're going to see happen maybe in the next few years?
We love this theme called Arm the Rebels, which was originally coined by Toby at Shopify, where he's kind of describing in a Star Wars analogy about, if Amazon's the empire, Shopify is arming the rebels. And so we have this belief of both arming the rebels and that everybody is an entrepreneur, or they'll have to learn to think like one. That as people are staying in jobs in shorter and shorter time periods, they're realizing that these big employers are not family. They don't have, you know, they're not making emotional decisions when they think about hiring and firing people. Like, they're doing reductions in force. That the pendulum's going to swing towards more and more people building entrepreneurial careers, which might mean having one or more employers by having more of like a basket of things that they do. potentially like owning their own e-commerce property or small scale Substack, but like finding ways of monetizing themselves in a way that they can control and have agency over. And that the end state of that is that people will also become owners. That's the like earn and own part of their own businesses, their own assets, like things that they don't necessarily have to trade time for money for. And that those things can become a smaller increment of value rather than, a you don't have to just found $1 billion company to be an owner of a valuable asset.
Absolutely. That's a very interesting trend there. Okay, we see the trend here, right? That's going to happen more and more, of course. So how do you now translate that into what are the kind of companies that can benefit from this trend? So what would those companies look like here?
So we've looked at like where are the traditional places where there are smaller businesses, and there's of course digitally native jobs, digital native businesses like the Shopify store, e-commerce store, for example, or a Substack writer, like people who are using a platform to deliver mostly a digital product or service. But there's also in real life franchise owners, shop owners. You see a lot in hospitality. So restaurants usually have, or coffee shops or bars have one location, maybe two, and uh, like another example would be healthcare, potentially like the care economy. Like we're thinking that even teachers can be like teacher entrepreneurs. So there's the rise of school choice and micro school and pod schooling. Like teachers can be their own brand and spin up their own small school that serves a niche customer extremely well, and that smaller unit can now operate with the overhead efficiencies of a massive company because the technology stack can power them.
Absolutely, that's amazing. And now, when these opportunities are coming to you, these deals are coming to you through various sources that you mentioned before. How are you evaluating those deals, and what are the key components that you look at while evaluating a deal?
So the first question I always ask is, who are you and why are you doing this? So we like to back people who are really building their life's work. Like they've thought about a problem, an industry, a sector for 10 plus years. They've um, really understand it and think that they have a differentiated take on the market. And that usually they also usually have a track record of excellence. Like they've kind of exceeded and excelled at everything that they've done, and they have plenty of options. Like they could go work for a big corporation, they're highly in demand, but this is like what they want to do with the rest of their life. Like they are going to build this and solve this problem for the next 10 to 20 years. The other thing that we look for is we make sure that it's a complete founding team. And so we're in the business of investing behind technological innovations. And so you need to have a technologist or an innovator somewhere on the team that's really like built into the cycle so that you're staying ahead. And that tech element of the offering is really important.
Yeah, absolutely. And once you've invested in these companies, how does the journey look like from there on? How are you helping them succeed?
Yeah, well, it's really very founder dependent based on what it is that they want from us. So, like, our first rule, of course, is like do no harm. Like, I don't want to be the VC that's pestering you over email, if you're, charging ahead and running your business. But at like the other end of the spectrum, there are solo founders that we've partnered with and I have like a stock take with every 2 weeks for an hour where we sit down and we examine like what's with the management team, like what's gone well, what are they working on, what does the pipeline look like, is it well capitalized, and we just problem solve wherever is needed in order to navigate through. And I think that by being a successful exited founder myself, I've seen how long the journey can be and the various ways that you can make small mistakes or like underestimate risks. And I just want to help the founders that we back set them so like you can't unleash greatness. Like I can't make the company successful, but I can probably help you avoid failing for dumb reasons, basically.
Absolutely, totally agree. And you being an exited founder yourself, there's going to be tons of learnings there. So right now we are in a kind of difficult environment for founders. Capital isn't easily accessible. So what would be your advice for founders who are building right now? What's the way to build right now?
Sell, sell, sell. So,
Right.
look, like, if you don't need access to capital, like, you get to your default alive, you get to decide your own destiny, and you have the ability to be patient, to wait out inevitable storms. But the only way you can do that is if you have customers that love you, that are willing to pay you money, and you're growing through sales. So instead of focusing on the build, 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 focus on the customer success, like customer love, like building and selling and getting paid for a valuable product and service that helps your customer.
Absolutely, totally agree. And you're operating at a very competitive space. It's early stage investing, pre-seed, seed. A lot of investors in that space, right? So, how do you stand out as an investor and try to win deals from there?
I come back to my operator founder roots where I'm say, look, I've been in your position before. I've founded and exited a company. We actually didn't raise money for our company, so I know what it's like to bootstrap and be cash constrained. And I'm not going to sell you on my money. I'm like, I see myself as a partner. And then the other thing is like so there's who I am, what my experience has been, my journey. And then I think the second thing is that I only want to work with founders where we have a shared vision of the future, and we're working together to tell that story and shape a new market. And there are actually very few, I find that there are very few VCs that put out a compelling proprietary original thesis of the way the market looks. Like they're maybe a little bit more reactive, or they invest across like widely different sectors. Like we're pretty tailored into our like worldview, and are able to help founders build connections and bring people along with them. Like it's very important to me that for the companies that I invest in, it's like a me deal where I'm like, okay, I'm a great investor for you. Like my experiences across maybe education or building a services company can really help move the needle. And I know that there are plenty of companies out there in places like medical devices or like construction robots where it's going to be very difficult for me to you know be helpful other than like providing money. And so I really focus on the areas where I think I have an information advantage, and where I can help move the needle.
Absolutely. I think for right now, you might just be the ideal person to have on the cap table for any startup because you've built a startup just in that fashion, not burning much capital and just using your own resources to build a solid business and then exiting to private equity. And you mentioned that selling is such an important aspect right now. That is the only way you can bring money into the business and try to self sustain. Any sales tips for founders?
I'm by no means a sales expert, and I think that one of the things I would say is like this is like I didn't make this up, but someone says like first time founders focus on product and second time founders focus on distribution, and I think that's really true. And it's like don't think of sales as like an add on of like, okay, I have my product and now I'm going to sell. Think about it as a key part of the company that you're building, and do as many pre sales as possible. And I think about sales as a relationship where you're trying to influence and partner with your customer. You're not trying to sell them on like a false basket of goods. And then I think the other thing is be clear about who like what your real like use cases and who your ideal customer is, and don't get distracted by people who are not your like ideal customer, or because there's lots of bad revenue out there, being like, I see that sometimes people get very starry-eyed about this happens definitely in education when people are trying to recruit students that might not be a good fit for their programs, and they're like, well, this is like another $10,000 each student of revenue, and you're like, yeah, but is it profitable revenue? Is it good revenue? Like revenue doesn't matter, sales don't matter if you're not actually converting that into something valuable that is adding value to your company.
Absolutely, totally agree. And we have seen some instances here in India. We had some big valued edtechs here. One of them being Byju's, which is one of the most
Yeah.
valuable edtech companies in the world, right? And it had a massive markdown recently in valuations. because I think the thing that they got wrong is exactly that they were burning a lot of capital and acquiring maybe the wrong kind of customers who are not getting so much value, or maybe they were using pushy tactics to sell and optimizing those growth numbers so that they can raise bigger valuations, and then the market slumped, and then they can't really keep on following that model. So that model is not sustainable. Maybe if you have a rosy market, everything is good, optimistic people, then it can probably would have kept on going like that. That cycle would have kept running. But now it cannot function like that because there is a change in the market, and that's actually how markets function. So it's not a sensible way to build a company, in my view, personal.
Yeah, I think there are like multiple ways you can play the game, and there are founders. I think Byju's is like a good example who really like played the game like a fiddle. You know, it's like masterclass and how he was able to attract capital, like sell a big vision, like read the market tea leaves. And I'd say that I grew up in Minneapolis. I love going to the Berkshire Hathaway annual meeting every year. Like we're yes venture investors, but with the DNA of like let's build generational companies and do it in a pragmatic way with still a massive vision, but like fewer kind of like bumps along the way. And so I think that there are multiple ways that you can play the game, and you need to know what game you're playing, and and not get confused.
Absolutely, totally agree on that. And now let's talk about portfolio construction. So, how do you think about constructing the portfolio and having the different elements in place? What are your ownership targets? If you can give us an insight into that.
Yeah. So my first fund was pretty broad, 36 companies, 39 investments. So we did three follow-ons, and um, it's good, especially early stage, to have a lot of diversification. But what I saw from that experience was, especially because I'm a domain expert and I'm working very closely with founders, like quality beats quantity any day. And I think as an investor that there are some like A plus bets, and then there are others that are like there's a little bit more hair on them, A minus, B plus, and you want to put the most amount of capital into your winners. Like at the end of the day, like your job is to generate returns for your LPs, and that's only going to happen if you have ownership and capital in your in a winning company that is really knocking it out of the park. And so um we aim for about like 5 to 10% ownership with our initial check, and that means going very early. Like you almost always less than 10 million post money valuations. If I come in after that, we might ask for like advisory shares or something like that, because we are like domain experts, and maybe the founders have very generalist investors that don't understand the space, and we think we can add something, but we need to be able to like make it worth our time. Um, and it's a 4-year investment period. We hope to do somewhere between 20 and 30 investments. We've done 2 core investments to date, so we're still really early in our fund deployment and are actively looking for the right founders to partner with.
That's pretty awesome. All right, let's talk about the importance of collaboration, especially in early stage investing, because I think there's a lot of collaboration happening in constructing seed rounds and things like that. You can tag
Hmm.
along some bigger VCs. So, how important is that aspect in early stage investing?
Well, for me, I've always thought one of my competitive advantages was getting in early, like writing the first check, working with the founder pre-incorporation. And so I think when you're a new fund, you have to be able to like get conviction quickly and take the risk. And so, yes, like collaboration with other VCs is important. It's important to be able to have a good reputation so that you can connect your founders to downstream capital and people will take those calls. But I don't rely on other VCs to send me deal flow. I mean, it's always great to collaborate. It's nice when there are definitely investors that invest at a later stage than us that will send us things that might be too early from them. A couple of my LPs also do direct investing, but usually bigger checks later stage. And so we work very collaboratively together. And it just, as a solo GP, adds leverage to my team. So I think, I mean, obviously it's good to be collaborative and cooperative, but you can't lose focus on your own game and advantages, and trying to add value to your founders.
Absolutely. All right. So, coming to my last main question before we move on to the rapid fire round, and this one is What's been your biggest learning as a VC?
My biggest learning as a VC is to not make assumptions. Like, I think you can take a pitch or a company and kind of fall in love with it and then be like, oh, well, if they did this, it'll turn into that. Or like, I can see how this can work. But it's like, you're not in the driver's seat. You're taking you're a small minority in this company. And so you really have to listen to what the founder is building, their vision, like their judgment over time, because you can't project your um, views on it.
That's a very interesting point there, because mm, I have seen instances where a startup is operating from my eyes. Let's say I'm an investor. From my eyes, it's operating in an amazing space. I
Mm.
think this is the exact company that needs to go big. But when you listen to the founder talking, they're not hitting that point, maybe that exact point that I'm thinking about, right? So that is somewhat of a disalignment. So might be a pass there, right?
Yeah, and it depends on, like, there's one founder in my portfolio that had like sort of the right idea but wasn't communicating it very well, and I when he was pitching me, I gave him very blunt feedback, and then he came back within 24 hours with a new deck and was like, okay, here's how I see it, and really wanted feedback and advice and like to work together on the strategy. And so that then was a um, I really liked his competitive advantage and positioning, and so we could work together on it. But there's others where it's, and this is especially where it's like, if you don't know the space that well and you don't have a lot of connections, there's just like very little you can do. There's another founder that I'm thinking in my portfolio who's good, very good technically, but is really struggling to do those sales, and it's in a space like that I just like I don't know. I can't like call up five people and get him help. And yeah, so you have to pick your battles, and where you think you can win.
Absolutely, totally agree. Awesome. That brings us to the end, and let's do the rapid fire round now, wherein I'll ask you five quick questions about the fund that you're investing,
Yeah.
and you have to give five quick answers. All
Okay.
right. All right. So the first one goes: what are the sectors and regions you invest in?
Mostly North America, but can be remote and global. And we invest in companies that transform how people learn, earn, and own. That often means ed tech, future of work, SaaS for small businesses, Web3, that if it allows you to have ownership economy type stuff.
Great. What's the typical stage of investment?
Pre-seed,
What's the typical check size you put in?
150 to 300.
Where can founders apply for funding in case there's a direct way?
Send me an email at hello@avalanche.vc and include who you are, why you're building this, and any investment materials.
Awesome. Where can our listeners follow you?
I'm on Twitter, KR Donnelly, and LinkedIn is probably, those are my two best channels.
Awesome. Pleasure talking to you, and I wish you happy investing.
Thank you so much.